Hey everybody, Boris, let's begin Forex. Welcome to our weekly technicals for the majors for Euro dollar, dollar yen, and pound dollar for Aug 27 to Aug 31, 2018. The theme this week really is going to be can dollar hold bid. As we closed into the week, what was interesting and really sort of, I think, surprising to many people was just how strongly the dollar weakened into the close. And we'll see if there's a follow through at the start of next week. The levels actually really moved up. The euro, which was trading as low as 113 last week, now has moved up to the 115 bottom, 117 range, and looks to me actually as one of the strongest turnarounds on the charts. We'll get to that in just a second. Yen is having a devil of a time trying to get through the 111 barrier, and in fact failed again today. We'll have to see if it can hold the 111 into the beginning of next week, but if that's given, it really basically suggests that we could be moving much more closer to 110 versus 112 as the weakness on the dollar really manifests itself in dollar yen. And cable, of course, its own Brexit drama story. Really the weak link here on the anti-dollar flow. Couldn't even make it above the 29.50, certainly well away from the 130 level. That remains to be the cap. The support is at 27.50. We'll see if there's any news or advancement in negotiations on Brexit, but it looks like the market is starting to really price in the prospect of a hard Brexit. And if that's the case, it really suggests maybe further lower prices down the road. We could be breaking 125 as we go forward. We'll have to see how that plays out. But for now, the price action in cable is by far the weakest. The calendar this week is incredibly boring. It's the last week of August. There's literally nothing going on. Half the people, I think, are actually away. And nobody really wants to do anything, I think. When you look at a calendar, as far as the economic data goes, we have the second estimate of U.S. GDP, which is coming up when on Wednesday. A trade good balance, IFO coming up on Monday. All of these things are actually bearish. It all suggests a global economic slowdown exacerbated by the trade tensions from the Trump administration. And all of this, I think, is just kind of creating a background that works against the notion of this straightforward rate hikes by the Fed. And that, I think, is really the big story this week. The big takeaway was just how dovish Fed Chairman Jerome Powell was. And I don't mean that he was really dovish, but what I mean is that he really wasn't nearly as certain and hawkish as he was before. There is fissure on the FOMC board now about the idea of maybe that they shouldn't go to two rate hikes this year if the economy starts to continue to slow down. Clearly, the one thing that is slowing very badly is housing. We saw existing homes, new homes fail. We'll have to see what a pending home number is this week. But that's starting to really manifest itself as the first casualty of higher rates. And that's making the Fed pause. We also have preliminary CPI data out of Germany. Again, not much. Kathy's bullish that because she thinks there was a sharp rise due to export prices. And probably, I think, the only event of the week worth watching, well, let me take that back. We will be watching the PCE, the personal income, and the personal spending on Thursday. That's actually relatively important. If it deviates much, if there is inflationary pressures, it actually puts the Fed in a terrible position, something that I was talking about, which is a slowdown in growth and a rise in price levels. It almost forces them to rise into a recession. So not a pretty picture if that's indeed the case. But as far as pure economic raw data, the one thing that's of interest is going to be the GDP data here, and CAD. We'll get to that in a while. Is obviously going to be a key component. I'm going to review the CAD in the crosses section again. But that seems to be I think it's the only crosses data that we have this week. Otherwise, really the major data this week is IFO, CPI, PCE, US GDP. Nothing of any great interest as far as data sets goes. Now let's go to the charts because that's really where the interest lies. Look at this chart. This to me is, I think, surprising and just blazingly bullish as we look at the chart, because the euro now has made a very rare V-shaped bottom. Now these bottoms tend to be, the reason why that's kind of rare is because generally when you have a big downward move, the price dissipates across time spectrum and kind of ranges before it decides it bases. But here we had a very sharp sell-off and just a sharp short covering rally. More importantly, this is the key thing that I think is important to watching. The short covering rally took us straight through the 20-period SMA, and now to the highs of 3 days, basically to the highs of the week. We close on the highs of the week here. The possibility that we go to 117 versus 115, I think, is much stronger at this point. And certainly we have some flow at the end of the week that should have some continuation. Really, the big resist level doesn't come until about 1750, 1800. That's going to be a much bigger challenge. But from here to there, there's about 100 pips worth of trade that I think could very well be much worth taking. Cable, much weaker situation. First of all, you can see that the 20 is still below the 500. You see that it can't even make it above 20. 20 now acts as a resist rather than a support level. And more importantly, 30 just seems to be so far out of reach. This is a much weaker story, and probably suggests that unless the only problem with sort of selling cable is that on any given day, if there's positive Brexit news, we could have a massive short covering squeeze to the 130s. But it really requires some very serious cooperation out of the Europeans, which I don't think is going to be coming, or some very serious compromise out of the UK, which is not going to be coming. So as long as we remain at a standoff, the market is starting to price in the prospect of a hard Brexit, and cable just can't get out of its own way. There's no real serious data on the calendar, so we'll have to see if there's any kind of headline-driven information out of UK. But for now, technically, cable looks weak. Last but not least, here's the yen story, and this is what I mean about disappointing to the bulls. Twice we've basically failed at the 1150 level. Twice we couldn't hold it. Now, if we come out of the gates running, and if Monday we suddenly take out the 1150, that would be a very bullish sign, and that would suggest, yes, we're on our way to 1200. The market is going to get bullish, bullish dollar. But the problem is that the 10-year is just destroying any kind of serious momentum for the dollar here. 10 years 2.8. We are the 10s to 2s, which is the 2-year yield against the 10-year yield, is 23 basis points. We are within 20 basis points of essentially compression or inversion, as we call it. And the Fed is getting very worried that they don't persistently, they don't want to push it to inversion. They do not want to make the short-term yields be higher than long-term yields. So, and nothing on the calendar suggests that there's going to be some massive bullish dollar sentiment. So I find it difficult. It's not out of the realm of possibility, but I find it difficult that we see a rally here. Right now, if you just simply take a cue from your price action, all you have is a failure of lower highs. That's a bearish construct. And if we dip, this is the key thing. We start dipping with the 20 SMA here is around 1100, right? Basically, if we close below 1100, it really opens up the path for a test of the 110s. Now, 110 is a very solid support, but from there to here, as I said, the path towards 110 seems to be much more probable than a move towards 112. And for now, the biggest, strongest trade as we start the week looks to be the euro dollar. That's how it sets up. Boris, over and out.